GM, and welcome to the Modern Market. This is our daily show that we run from Monday to Friday at 7 a.m. Eastern Time to talk about all things crypto, the NFT market, the Bitcoin conference market today, and certainly also the Mochaverse, that token market today. Everything that we say on the show, whether you're watching on X, whether you're watching us on YouTube or on the X live stream, is not financial advice. I am hosting together with my co-host Sammy today. With that out of the way, welcome, my friend. How are you doing? How are you feeling today?
I'm good. Just been catching up on the market. Obviously, Mochaverse popped off, so I've had my head in that at the moment. But yeah, there's a lot going on as always. So keen to get into it. How are you doing? Are you getting some ETC FOMO?
I don't actually. Seeing that everyone gets robbed there, and also seeing that Luca now has Luca's passport was apparently stolen from his hotel room, and he won't be able to make it back to the States tomorrow. Apparently, he has to stay until Monday. I don't feel that strong sense of a FOMO as I normally would do, but I probably feel more Bitcoin Nashville FOMO. What about yourself?
I didn't realize that Brussels was so dangerous. I just don't know if it's like people being silly about flexing what their like all their wealth and stuff, or whether I just don't understand why it's so dodgy. Like I've never had that as a place that is a scary location to be in. I don't know if it's just maybe my perception from an island, but maybe your perception from Austria or Germany might be slightly different.
I mean, I did have a look at Numbeo, that basically stats site that tracks all kind of statistics across different cities in the world. Crime rate is something that has been actually going up in Brussels, and it's not a dangerous city per se. I would say this is would be a massive exaggeration, but I don't know if you would compare it to the likes of Vienna, Amsterdam, or even Bucharest. Crime rate in those cities would be significantly lower than in Brussels, but I think it's, if anything, it's a more targeted thing against a crypto conference, and I'm honestly surprised that this isn't happening more often.
Well, I think it potentially might happen more often over time as people realize that wealth's coming back into crypto. But I think being in London, like you see, I mean, it's quite a lot of crime in London, even though it happens in certain pockets of London. But because my partner's a doctor, she sees it firsthand. So she sees knife stab wounds. She saw a guy come in with a machete in his head the other day. So yeah, it's a little bit different. I think that maybe we have a bit more awareness of what to do and what not to do in public with respect to wealth and stuff. But yeah, it's just interesting. I just saw it over the timeline. I was just like, really? It doesn't really make sense, but it's interesting to get your perspective.
Yeah, no, absolutely. Like, I think from thinking about London, London is such a big city. And as you say, you have probably these pockets and you know, like, what areas to avoid. And just Brussels is a way smaller city. They have like, what, 1 million people living there. And if you have like a bad neighborhood that's close to the conference, you're like literally in the middle of that. And you probably, in London, you wouldn't get to the areas you want to avoid unless, you know, your hotel is close by there, but typically the conferences wouldn't be in those areas. So that's probably also one of the differences.
Didn't you stay in Croydon when you last came to London?
No, I didn't. I was driving through Croydon for the
okay. Okay. Nothing against Croydon. Anyone that's listening to Croydon, I have nothing against Croydon. It's a great place.
People will now try to hunt you down and find you in London.
I don't live in Croydon.
That's what I would say as well. But no, I have more FOMO about missing Bitcoin Nashville. And ironically, it happens on the day when I will be touching down in the States because I'm flying out in 2 weeks. Trip's going to be Denver for me. Going to go to the Rocky Mountains National Park for the first time. And then it's back to my favorite city in the US, which is San Diego. Going to be there for a couple of weeks. And it will feel weird, honestly, to miss out on the Modern Market, because Modern Market would be at 4 a.m. for me. And I'm just not willing to do that on a holiday. But it's also the first time that I'm like taking off more than like 2 consecutive days, or more than 1 day at a time, I think, from the Modern Market. So that will feel weird.
Yeah, because you've been doing it for over a year now, right? I mean, I came on, 4, 5, 6 months ago, I think. But you guys have been doing it for a significant amount of time. So it must be quite nice to have a break.
Yeah, but I don't know. Like, I kind of got used to that. Like, it's also my main source of information for everything. So I think I will still listen to the recordings, at least partially, to catch up with stuff.
Yeah, boost those numbers.
Yeah, absolutely. Anyhow, we have a lot of things to get into, so let's let's get into the news for the day. We have the snapshot shared on pinned on X in the spaces, and also sharing it on screen for those watching us on video, either on X or on YouTube. Before we get into the snapshot and the main news, though, quick look at the majors. Bitcoin is up from yesterday, actually a bit. Yesterday we reported it when the show happened. That is at 57.4K. Today we are up 1K at the 58.4K. ETH is also up a bit more than a percent at 3.14K. And Solana is pretty much flat, $143. In terms of the main headlines, talking about the conference FOMO, we have Donald Trump speaking at Bitcoin 2024 in Nashville, according to Bitcoin Magazine. We will definitely get into some of those details. Then Goldman Sachs actually wanting to launch 3 projects this year around real world assets, which I think is quite interesting to have a couple more comments on their strategy. And obviously the big launch of Mocha versus Mocha token today. And I think you, Sammy, had a fantastic thread on that, going a bit more into the overall strategy of Animoca Brands, Mochaverse, and details on the TG as well. We'll definitely have a deep dive into that a bit later in the show. In terms of the notable sales, it's been a while, but now we have a Golden Bored Ape sale to report, going for 105 ETH. Also, we saw a Pudgy Penguin with the villain mask. I think I saw that Yellow Panther bought it yesterday on the timeline, with his post being looking similar to Mbappe with his nose mask after he, I think, fractured his nose. And also a CryptoPunk with a wild hair trade going for 54 ETH. Taking a look at the general NFT market, moving over to our marketplace partner and NFT trading platform partner, Mintify. We definitely have some interesting things to report on. One of which is the price action on Mochaverse. I'm not going to say too much on it because I do think that you, Sammy, have more thoughts on that. Azuki's are down a touch at a 4.11 floor, down 0.4%. Captains do see a bit of a correction after the pump that we reported yesterday, back to 2.6 ETH floor, which means they're down 5%. Miladies are down. Remilios are actually up a couple percent. That's interesting. That's something we don't see that often. And in terms of the other big winners from the major collections, we have another green day for Doodles, up another 8% and currently sitting at a 2.1 ETH floor. Sammy, what else is standing out to you in the NFT market, and especially what has been going on with the Mochaverse price action?
Yeah, well, I think Austin coming on the modern market yesterday has probably pumped the price of Doodles, so that's a good. I mean, it's really interesting just to get his insights as to what they're doing. But I suspect also the conversations that are happening at ETHCC has probably helped. Mochaverse, yeah, I mean, it's down. I mean, it's to be expected. You have the token launch, so if you look at it in terms of an XDiv, like people have received their liquidity, they're selling the NFT. I think it was potentially oversold. I saw them drop down to as low as like 1.1. which when you were looking at them, was it 3.3, 3.4 yesterday or the day before? I mean, that seems quite significantly oversold. And I was definitely eyeing up, I was trying to bridge some ETH to buy some, just because I think I have a longer term time frame for Mochaverse as opposed to maybe some of the short term traders. But I think even that, like it's back up to a 1.8 ETH floor. If you add that to the token allocation that you receive as well, I don't think it's too far off what the price was. Plus, when you start factoring the taxable event of selling the NFT, maybe staking or selling the tokens, I just don't know if it's worth actually trading it. Which is why I was just like, look, you know what? I'm probably just going to stake the NFT for the bonus, stake the tokens for the potential benefits, whether it's tokens from the ecosystem later on. And just get that additional, I think you get a 50% boost if you stake within the first 14 days for that 14-day period. So there's just like a number of factors in there around the Mochaverse, but I think the price action to be expected based off any other collection that's launching a token, you'd expect it to dip post TG.
Yeah, so, no, I think that's a very, very fair point. And as you said, like that dip when it went down to the lowest low at, I think, a couple sales coming through at 1.1, got bought up pretty quickly. So that was quite a sign of strength to see. I mean, admittedly, it didn't take too much volume because it was just a couple of sales, but still the rebound did look quite strong on the charts.
Yeah, I think we saw so I think we saw the founder of Anichess, which is a portfolio company, buying up a bunch of Mochaverses and posting that on the timeline. So I think what I find interesting is that Animoca has a significant number of portfolio companies, each of which have their own founders, and they're aware of what those network effects could potentially be. So if you've got those guys stepping in and buying it, that's relatively bullish, because I think they're aware of what it could potentially yield. So yeah, it's an interesting one, but I think at this point it's probably oversold. And I think we had a discussion before the show around that as well, and where this could go. And I guess we'll touch on that slightly later on when I start talking through my post.
Yeah, let's actually switch up the order and stay on the topic, and I'll let you set up the thread. I will pull it up on screen. In the meantime, quickly change the headline of the Spaces if you want to walk us through the write-up.
Yeah, so I mean, we've seen reference of the Mocha token potentially being like a proxy for Animoca brands, and people have referred to it as like the ETF. So I've just included a snapshot there just to visualize it. But I think it is also important to note that being a token holder and being an equity holder are two very different things. But I think what we'll do is we'll start off by just explaining the thread, and then I'll go into the kind of the thesis behind it. But so they released their financial results. So for March 2024, that kind of reported that they'd got sort of close to 3 billion in assets. I think it was 300 million in cash. So if you just scroll down to the next slide, I've put those dots on there. But yeah, so close to 300 million in cash, 2.7 billion in assets. And they'd experienced sort of 72% growth in Q1. So for that year to Q1 2024. Now the key drivers of that, it touches on in the press release that there's been additional advisory services, so consulting, token advisory, and that would be to probably predominantly Web3 companies, but also potentially Web2 factored into there, just as that's the key driver in that growth. Obviously, they've got a range of other services and revenue streams that would kind of justify the total, which they haven't disclosed in the press release, but that's just the growth element. So pretty solid financial results for the year to March, 31st of March. The thing that I note though, I think there's been discussions around a potential IPO. And for those that were kind of around in the crypto space back in 2020, they would have remembered that the Animoca were actually listed on the ASX for a period of time. They were delisted as a result of having sort of affiliations with crypto and blockchain related businesses was the kind of the reason given. So just in terms of, I think it was just compliance with those listing rules. And if you recall back then, I don't think the infrastructure was necessarily in the right place for that. So I think we've come a long way since then. Ironically, even the ASX computer system, so CHESS, it's like a clearance system, was since actually exploring the use of blockchain. I think they've kind of reneged on that since then, but that was something that they'd looked at since 2020 when they were delisted for those crypto reasons. I do think that now you've got the likes of Bitcoin ETFs, and imminently you can have ETH ETFs going live. That, I mean, the market has kind of shifted. Now they have, I think Yat has mentioned publicly that they're looking at, or they're exploring other listing options. So Hong Kong, Middle East has come up, and those that are kind of aware of what the ecosystem, the Animoca ecosystem is, you've got so the Neom Investment Fund. They've actually invested within Animoca, so they've got a vested interest in that particular venture, and I suspect they'll probably be getting more involved in the Middle East for building out that Web3 infrastructure over time. So I think that kind of struck me as being pretty interesting. Now I think I'll probably say, okay, where am I going with this? I made the point in the opening hook around you've got there's no current publicly listed companies that have a token. Now, if Animoca have just kind of launched this Mochaverse token via Mochaverse, which is their flagship product, I know it's not direct, but it is pretty closely entwined as to what Animoca is doing. If they then go to IPO on one of these other stock exchanges, then you've probably got the first listed or publicly traded company that has a token. Now, there's no sort of precedent set as to what that could result in. But ultimately, I think that if you look at Coin, so Coinbase is kind of seen as like a bet on the crypto industry as a whole, but they don't have a token. I know there's been speculation around Base, but there's nothing confirmed yet. And I think they're obviously going through the regulatory stance with the US to make sure it's kind of watertight before anything happens. You've got Binance, which has the BNB token, but they're not publicly traded, so they're privately owned. And I think CZ has a majority stake in that. You've got other ventures like MicroStrategy, which is a publicly traded company, but just is effectively a leverage bet on Bitcoin, the amount of Bitcoin that they own through issuing debt. So they don't have a token that they've issued. They just own a lot of Bitcoin, and their stock price is very closely correlated to the price of Bitcoin. I think we discussed that there was at one point a publicly traded company over, what was it?
Overstock, I think, trades on
Overstock.
the Nasdaq, and they used to have a crypto exchange which shut down in 2023. So that's not the case anymore. Yeah.
Yeah, and I think it's a different venture as well. So it's just interesting to see that this could be one of the first venture capital, like Web3 venture funds that kind of enters the space with this token as well. Now, just to this point, so the thing we have it on the screen currently, so stock is equity in the business. Yat actually released an article probably about 3 or 4 hours ago that kind of discusses his thesis on what a token actually entails and how that value accrues to holders. And it's his point is around the exposure to its network effect. So the bigger the network, the more nodes in the network, or the higher value of those nodes in the network, the more value accrues to the token holders. So it's different to the equity holders, so the equity in the business. But I think there is some overlap in how that ties back. So you'd have if Animoca was to list on a public stock exchange, they're going to have an increase in number of stakeholders. So the network that is kind of around the portfolio companies, the brand is going to increase as well. And if you have a direct correlation through the tokens to those network effects, then I think that value would accrue to the token holders as well, as my thesis. I think that if you think about it from an investment standpoint, the more capital that flows into Animoca as a listed company, the more capital they have to invest in more ventures. And if that's done if that's executed in a good way, then, and those subsidiaries or investments decide to list tokens, then there could potentially be an increase in the number of tokens that Mocha stakers could receive as a result. I think that is something that other token or network tokens don't necessarily have, which is why it's quite an interesting use case that could potentially, it could be exponential benefits. It's very hard to tell, but I just can't see how this wouldn't be beneficial for token holders long term, provided that the execution is done well.
Yeah, let's maybe stop here for a second, because I think that's a lot of info to process before we go into the Mocha token launch and those valuations in itself. But I think that's a super helpful write-up, and kind of, as you say, it creates like a situation that we didn't really have before, or potentially didn't have before, with having a potentially publicly traded company in the future, and as well as a token. And I like the basically analogy that you've been painting in your thread, saying stock is equity in the business, token is exposure to its network effects. And I find it fascinating to think like which way down, which way a trickle down effect would work. Do token holders become interested in a stock? Does it work the other way around as well? And I think it's also extremely challenging to kind of navigate those two stakeholder groups, in a sense, because one is officially a shareholder group. The stock owners certainly are, and the other ones aren't really. Like, I know that as a token holder, we often like to think of ourselves as shareholders, but it's not as clear of a picture as it would be just with trade, owning a stock directly. And I think there's like a lot of expectation management that needs to be navigated. And I think there's a lot of communications that it takes, for participants in the ecosystem, whether that is directly via a token or later on potentially via a stock, to like kind of understand what's going on. And I think even with Coinbase, and I know we had a lot of the speculation with will Base have a token, won't Base have a token, going back and forth on that, with statements insinuating that there might be a token, with definitive statements saying there will not be a token. But I do think that there's still like a good amount of speculation around that. And I also think it's not only interesting from the perspective of a potential valuation, speculation, etc., but like also interesting to think about from the governance angle and how that would work. And that's where I'm like quite curious to hear more from you, Sam, in your thoughts. How do you run a system that has both basically a token and is a publicly traded company? And could there ever be like a mechanism? Like I know with obviously Animoca brands and Mocaverse, those are like separate things. But could there ever be a mechanism in the future where we will see token redemptions for stocks, or is it something that you never will see happen because it's completely different things at the end of the day?
I mean, I wouldn't say never, but I think I think there's a lot to unpack there. And I think I probably just want to get back to basics. Like, I mean, maybe it's me being a former chartered accountant, or still qualified. But I think working with traditional finance, so financial institutions, I always want to get back to, okay, well, what are the cash flows? And I think if you connect that back to what an equity holder is, they're an owner in the business. So they're potentially receiving dividends for their equity, and that is their main cash flow. So that's their main benefit, or apart from the capital appreciation, the shares as well. So I think as the assets increase within the business, ultimately the value of that equity from a balance sheet perspective would effectively increase as well, with a view to getting a share of that retained profit. So they're going to be focused on the performance of that particular business. I think that with a token holder, the cash flows are completely different, and it's dependent on what that actual token or the tokenomics are. I mean, the vast majority of tokens, their main cash flows are from staking. So staking rewards, and I think with the Mocha token, staking that within Mocha list, or the staking mechanics are live, but it explicitly says that you receive benefits. So your benefits will accrue to token holders. What those benefits are, I mean, it's been suggested that that's going to be as the Animoca portfolio or business increases, then you're going to get exposure to that. And I suspect that's probably going to be through other token launches through their Mocha list launchpad. But it's probably, there's going to be a number of other things that they could potentially do that. So I think just getting back to basics and seeing, well, what are the cash flows that you as an asset holder, so whether that's through equity or like an investment or through tokens, like what are you going to receive? And that could be tailored like quite significantly depending on whatever product or business. Now, whether you have token attaching warrants or reverse like equity attaching warrants, that's a completely different standpoint. But I suspect that, I mean, we've seen it with some of the investment rounds that we've done over the past year or so. Like when we invest within, we get a safe, you get access to equity, but you might have a token attaching warrant. So you're then entitled to exercise the option to purchase that particular token allocation at a set price, just the price of the option premium. Now, yeah, I think that...
Sorry, interrupting you for a quick moment, because again, a lot to unpack. I think the investment side is super fascinating. You mentioned the term SAFE, which is a simple agreement for future equity, just for those who might not be aware of that, a bit more technical term.
Yeah, it's different from being safe in Brussels, but yeah, safe as in equity. So yeah, sorry about that joke. Yeah, so I think, yeah, whether those will be token attaching warrants, I think there probably will be in the future. I think with these publicly listed companies, it's just a lot more difficult because depending on the jurisdiction, then depending on the jurisdiction, it becomes very difficult to then do that, especially at those kind of levels where you're listed, you're heavily regulated. I think a lot of these like startups or projects that launch tokens, they're obviously flying under the radar in an unregulated industry where it can just be done a lot more easily. I do think that it will happen over time, and we're seeing progress. Like I talk about the delisting of Animoca because of its compliance with regulatory things back in 2020, but like it's come a long way. You've got ETFs with Bitcoin, potentially ETH soon coming live. So like we're making a lot of progress, and you've got like crypto being talked about by the politicians. Like they have an intention of bringing it to to market and pushing back on like the regulatory impulse. So I don't know, like I think there's a lot of progress happening, and I think 10 years from now it's going to be very different. I just think that having those time horizons for Mocha specifically, or Animoca specifically, like making it sort of medium to long term, I think it's probably going to do pretty well. And I think the leading it or trailblazing with that dual token plus equity through the publicly listed route could be a super interesting case study that others might follow as well. But yeah, keen to. I mean, you're from like a management consulting, investment banking background. Like, you're going to have exposure to this as well. Like, what are your thoughts on this?
Yeah, no, absolutely. Just one more point on that. I know you're not an expert on Australian security law, but you also say governance has come a long way over the last 4 years. Do you think that we would have seen this delisting, like assuming that the company still would have remained listed, that we would have seen it in 2024, or would it be okay to stay around if it weren't delisted in the past? Like, purely speculative question.
Well, I don't know specifically what they were delisted for. I worked over in Australia for about 4 years, so I had dealings with ASIC, APRA, so all the regulators, quite a lot over there. I mean, they're relatively. I think they're relatively flexible. I just think that, I mean, when I worked for EY back then, like any company that had any crypto related business would be incredibly hard to onboard as a client. And I think that's partly because the regulators weren't necessarily that as open to crypto back then. So I was over there from like 2018 to 2021. So this would have been around about the same time. But I also know that a lot of asset managers, financial institutions were ramping up their like blockchain integration. Some of the asset managers that we worked with had like Bitcoin and ETH, so that sort of the majors as assets that they would hold. And they were looking at potentially offering those to other clients. So like it was happening, and that's kind of why I got into crypto full time, because I knew that institutions were here to stay. But I also think that like they also have like regulatory compliance that if you don't tick all those boxes, there's like a minimum standard. And I think being listed, you have to have all those processes and controls in place. And if you don't meet those processes and controls, then you're not going to be able to be publicly trading the equity on the ASX. So yeah, it just depends. And I don't know the specific reasons for Animoca, but I do know that they have a certain threshold of what they need to do, and like the processes and controls that need to be in place are quite high.
Yeah, that's a very important point. I'm very glad that you went into this explanation. And in terms of the question on how I view it from a management or former management consulting perspective, like I think it's very fascinating. If you come from management consulting, what consultants are really good at, or consulting firms, whether that's the Big Four or the boutiques like McKinsey and other top tier consulting firms, is building a network and basically doing that line management placement. So you have consultants, they work on projects, they work on project companies, and they spend multiple months there. Sometimes they come back for additional work, spend more than half a year spread out over 2 or 3 years with that company, and ultimately get recruited by that company in a line management position. And by doing that, McKinsey, other consulting firms, like, manage to build an insane network. And when it comes back to having work with those companies, they often have a former senior consultant, manager, etc., who has been with McKinsey, who has been with the consulting firm, who now works at that company. And they have such a good way to get an intro there and to get potential future work landed with them. So that's like one way how consulting goes about building a network and then like leveraging it, but leveraging it for the same kind of business that they have been doing. And I feel like that token layer that Mochaverse is building just adds an additional layer of potential synergies and unlocks. As you said, the ecosystem and portfolio companies are already just closer to one another, at least those who are core Web3, because it is a smaller space. You mentioned AnyChess, who I think just now started their season 2, so obviously getting a bit of extra exposure for their chess game as well. Buying up some of the Mochaverse NFTs, but also it goes deeper than that. And I feel like the token layer, the loyalty layer with Mochaverse kind of can become a bit of the like connecting tissue between the portfolio companies, and obviously is profitable for Animoca in itself as well, because as you just said before, Animoca has done significant advisory business. I think it's 70 mil, 67, 70 mil in advisory. Compare that to like a mid-size consulting firm. That's more than those firms would typically do. And that's already an insane unlock. And having that token there on top makes it a very, very profitable business. Now, the question on how a potential listing will come into play for basically the overarching company of Animoca Brands in the future, I don't know. I think it's interesting how that could play out, but just that structure that they already have built is such an additional value add and such an additional extension of the business model versus a traditional consulting firm that I find very, very interesting.
I think also, like, I mean, we look at M&A all the time, and I think you probably be aware that, like, being former EY, that some of the businesses that they would acquire smaller companies just to bring them in-house for all those expertise. So a lot of the advisory, I think it was cybersecurity when that was popping off, probably in the late 20 teens. That was something that I saw in Australia specifically. All of a sudden we had about 30 or 40 new faces in the office. And that's because they acquired like a cybersecurity expert business. And I could easily see like one of these big consulting firms potentially even acquire Animoca if they see it as like a valuable consulting business that has expertise in tokenomics. And that to me kind of excites me, because I think there's like blockchains here to stay. You've got a lot of interest from businesses to integrate that. So could you potentially see Animoca being publicly listed and then acquired? I don't know. Like it's definitely something out there. And I think because you've worked in investment banking, you probably have a better view on that. But yeah, that's just something that piqued my interest based on what you were just discussing then.
Yeah, no, that's a very good point. And even on the consulting, on the M&A side of things, like EY is notoriously good at that. At just buying up consulting firms or other businesses that make sense for them. That's ultimately how I in the past have gotten into EY. Was a boutique consulting firm that was mostly doing governmental institutions and nonprofits, and the governmental side is a very strong one in Austria because there's like so many supranational institutions. You have OPEC and others in Vienna, and that was just a business that EY wanted to also dip more into, and that was an acquisition that made sense for them. And you can obviously spin that up on a higher level and look at companies who would be interested in acquiring Animoca Brands. But just also given that they have this wealth of investments in the portfolio companies, I think it would make for like a super, super complex deal that is probably not going to go through in that sense. And if anything, then it would probably be more interesting to acquire certain subsidiaries depending on what they are building out. And that we could certainly see, like given the investments that they have, given that Animoca has also acquired some of the companies like in full, and seeing them being spun off in the future and being sold off is something that I would rather see than the whole entity being sold.
And I think that
come back on that, and I want to also go to Bear Snake, who has his hand up.
Yeah, I think I mean that is I mean I always go back to the financials when I hear about sale of like profitable businesses, because ultimately you end up having like an unrealized gain through the P&L. So we spoke about having what 2.7 billion in assets and like 300 million in cash, and like I can't remember what the other metric was, either 72 million or 72% growth. Like those kind of sale of those profitable startups, so those advisory services they offer to those portfolio companies that end up doing well, could significantly increase those numbers from a financial perspective. And I think that's super interesting. But I'll pass it over to Bear Snake for his takes.
Yeah, no, absolutely. Bear Snake, the co-founder and CEO of Forgotten Rooms, welcome to the stage. We've been having quite the in-depth discussion on that. Curious to hear your thoughts.
Yeah, I'm not sure if I can hang with you guys. You guys are very intelligent and sharp and clearly educated on the space. I have a background in working at public companies and working at a bunch of startups. There's this concept that's been quite vague in my head, but I feel like there's something there. This idea of when you start a startup, and sorry, I've been up for like 24 hours. When you start a company, you bootstrap it or you're VC backed. You have two options, more or less. You're either going to be acquired or you're going to go public. I think what's cool about what Animoca is doing is blurring the lines. I think that depending on where you are in the world, and that will shift as regulation progresses and innovates, is this idea of a third option and launching a token. I'm still wrapping my head around the concept of going public and launching a token. I was in a spaces with Animoca and I guess Mario Nullfall or whatever his name was earlier, and talking with Animoca on stage, and really trying to get to like the crux of what is the purpose of the token. And they talked a lot about bringing Web3 technology to the masses, obscuring all the technology that is kind of a barrier to entry, and just like bringing Web3 to hundreds of millions of people. They talked about IP, like international football leagues or soccer if you're American, or they talked about a lot of their investments in gaming, and so I guess I'm rambling a little bit, but I think there is something to the play between launching a token instead of going public. I love what Animoca has done. I think they've taken a lot of risks by investing in Web3. I love it. I'm a founder of a Web3 company, but I do wonder. I think directionally it makes sense, but it also, they're very experimental in trying to go public potentially in 2025 and launching a token. And I just think that, I'm not sure if you guys know, but Sony announced that they're looking to launch a token as well. And I think we're going to start to see a lot of these publicly traded companies, whether it's US based or international, look at the option of a token. But I think the rub here is that a lot of, and I'll speak to more entertainment based companies, the rub is there is like a one-way value extraction from the consumer to the IP holder, which is the studio or Sony, and I think that challenges their typical sort of business revenue model. So I'd love to sort of hear your guys' take on how that plays out.
No, I do agree with you. That's certainly an experimental model. I also think that, and it's something that Tiro has also brought up in the YouTube comments, saying that, going to the Coinbase example, that you don't want to be under even more SEC scrutiny if you launch a token necessarily, unless you have like a clear regular framework. And I think once we start to have more of that regulatory clarity, which we'll have at least in the EU with the MiCA, with the markets in crypto assets directive that is bound to become national law over the next 2 years in all of the member states in the EU, that this certainly will become a more attractive way to go. But it also could definitely go the other way around, because the criticism, for example, with MiCA being that it is a very strict framework, and it's going to the extent that it might be even over-regulating, that it just becomes unattractive to follow that strategy, even if you're not a publicly traded company and might have considered to launch a token for whatever reason, to just hold back on doing that. Sam, I want to go to you for your final thoughts, and then move on into the actual Mocha token and the price action on that.
Yeah, I mean, I think launching a token, I think there's been suggestions that a lot of those tokens are actually considered to be commodities as opposed to securities, whereas equity tends to be a security based on the fundamentals of it. So I think there's a lot more regulatory requirements with equity, and I can definitely see why people would veer away from going down the equity route, like issuing equity, and potentially launching a token, particularly if it's considered to be a commodity. I do think that as we get, like as Legendary mentioned, as we get that regulatory clarity, I think that we'll see a lot more, particularly mature crypto-related companies, or even traditional companies looking to enter crypto, have both. But it would just be down to like, well, what are the pros and cons of it, and how will that relate to their business specifically, and does it benefit them? And I think that's only something that they can work out individually if it makes sense and if it actually adds value, because I agree there's no point in launching a token and listing or IPOing if it doesn't benefit the company specifically. But congratulations on the move to Ronin as well, Bear Snakes. I've been following, I mean, I was back in NFTs in 2021, so I know about Forgotten Runes. So, and I'm a big fan of Ronin, got some Ron staked over there, played Pixels. So yeah, bullish on what's going on over there as well.
Yeah, absolutely.
Thanks. I really appreciate it. Took a long time to put together, but we've been building a game for 3 years, and we had to find the best distribution, and I feel like Ronin is the home for that. I don't know what you're going to talk about after this, but would love people's take. I love getting opinions on Ronin and what they can do and all that stuff. But thank you.
Yeah, absolutely. We won't go into Ronin and into gaming L2s, but definitely it's a discussion that we've been having quite a couple of times on the show. What we will do, however, is to go into the second part of the Moko news, which obviously is the price action. We've seen the token come out at a bit more than 6 cents and actually moving up quite nicely to currently 9.1 cents, up 40% since the TGE. In terms of the total supply, we have 8.8 billion tokens. That puts the Moko token currently at a market cap of 105 mil, the fully diluted valuation of 800 mil. And unless you have anything else to add to the price action of the token, Sammy, I would then quite like to move into the Web3 roundup.
No, not really. I think current market conditions pretty reasonable based on other sort of launches. So yeah, it's actually quite surprising though that it's going up, because most tokens dump on once they launch. So that to me is quite bullish. And I think the staking mechanics have been pretty clear when you log into that dashboard. So yeah, I think the benefits of staking, you get access to the ecosystem tokens potentially down the line. So that to me is quite interesting.
Yeah, I just wanted to say that it's nice to see a chart that looks like that as an exception for the series of TGEs that we've seen over the last couple of weeks. That actually goes up and not down after it launches. Anyhow, let's get into the Web3 roundup to bring you the rest of the news from crypto and Web3. We have as the first piece of news, Circle minting another 250 mil of USDC on Solana. That's now up to a total 500 mil minted over the past 2 days. A total increase of 25%, and overall stable market cap on Solana now up to 3.35 bill. We have as the second piece of news, Starknet announcing staking for Stark coming later this year. And as the third piece of news, Sol Firedancer seeing its first accepted block on testnet. Fourth piece of news, a bit interesting, a bit more moving into speculative territory, with Kobe suggesting that many prominent accounts on CryptoX are feds. Kobe saying that I'm not saying Mashinsky and Kwon were CIA assets. Obviously, people are going to commit crimes by themselves. Saying the feds actually like the criminals because it makes crypto look bad, which is the policy goal. A lot of alleged pro-crypto accounts have become promoters and supporters for the bad actors, antagonists of good actors, and their entire content strategy is causing general antipathy via intentional hostility, which dissuades reasonable people from participating in a community and learning more about the actual good non-scam things. DC investors are going to not disagreeing with Kobe. Quite an interesting take. Would have loved to have more time to discuss it, but unfortunately won't be able to do that on today's show. In terms of some additional news from Web3, we have the final squiggle number 9999 being minted next week by Snowfro. And we have Mark Anderson sending 50K Bitcoin to an AI bot on Twitter. It's quite an interesting story to read on Decrypt Media. And finally, Rekt Brands completing the equity claim for NFT holders with the Soulbound NFT claim. It's cool to see that process coming to an end. Talking about regulatory clarity and the setup, seeing companies like Rekt Brands or The Plague actually being able to drive equity to the NFT holders is quite fascinating. We have 10 minutes left in the show. What I would quite like to do is to quickly move on to the second piece of news that we had, because I think that connects nicely to what we've been speaking about, to the Goldman Sachs piece of news. I'm going to quickly, there it is, set it up for us. So Goldman Sachs is to launch 3 tokenization projects by the end of the year, says their digital assets chief McDermott. And that's quite an interesting one because we've seen BlackRock, we've seen Franklin Templeton testing tokenization as well. And now having Goldman with that actually quite concrete goal of launching 3 projects around real world asset use cases by the end of the year with some of the major clients. I think the first client also for them to do that with in the US is an interesting move when it comes to the institutional use. And I don't know, I can't help the feeling, Sammy, very curious to hear from you. I'm not going to go into all of the details of the article, that the RWA exposure is getting bigger and bigger. And like, as someone who's been in crypto since 2016, real world assets, like that buzzword has been around for quite a few years. And I feel like it's been coming and going, but it feels more sticky this cycle. I don't know if this is like my personal hopium because it's a use case that I think is pretty cool, or if it's actually going to stick around this time.
Yeah, I mean, the term RWA is thrown around quite a lot, and I think just understanding what that is probably pretty important. But I mean, tokenizing fiat, so like USD, euros, those kind of things, is also putting that on chain is probably wrapped up in that. And I think BCG made a report that by 2030, I think 16 trillion is what they're looking at the market cap for tokenized assets. And I think that's their conservative estimate. Their best case was about 68 trillion, which is huge. So I think that at some point we're going to have everything tokenized and on chain. And I think all these big asset managers are just the starting point. You've got BlackRock with the BUIDL fund, which I don't know what valuation it's at the moment, but I think it was at 400 million when I checked last. But there's like a number of other asset managers. I know Franklin Templeton have been doing it for some time. I think they've been doing ETH staking for some time. So all these big institutions, when I was in TradFi back in like 2020, they were really interested back then. So that interest has been happening for some time. And I think it's just trying to get that regulatory clarity. And then once that does happen, the floodgates will open. So to me, it's unsurprising that you've got Goldman Sachs trying to enter the scene, particularly now that you've got like BlackRock in there and a few of the other big asset managers pretty interested, particularly after the Bitcoin ETFs have been around for 6 months now, and ETH ETFs are on the line. So yeah, to me it's inevitable. It's only a matter of time.
Yeah, absolutely. BUIDL fund just checked it on Etherscan, actually up to more than 500 mil now. How long has that one been around? That's growing quite quickly.
A couple of months, maybe. I think it's a couple of months. It's pretty wild.
Yeah, it absolutely is. And as you said, like RWA is encompassing so many things. Like I feel we often see the very easy use cases on the timeline, like tokenizing Pokemon cards, tokenizing luxury watches and trading them on Kettle Finance or using them to farm the Blast airdrop a couple of weeks ago. But there's obviously so much more to the segment.
Yeah, and I think we have our own like CT bubbles. I think we talk about NFT specifically more than the wider DeFi side of things. And DePIN's pretty huge. You've got RWA. There's a whole different raft of crypto Twitter that kind of talk about that. But yeah, we touch on quite the small elements of that with tokenizing Pokemon cards and like even I think the Mount Gox, so Magic the Gathering. Sorry, not Mount Gox. Magic the Gathering. Like high value cards sold for like $3 million recently. We've seen nothing anywhere near that in terms of on-chain sales, but that's inevitably going to happen at some point. I think I saw you quote tweet Colony with, was it an $800,000 sale or like loan?
I think it was 80K.
Yeah. So I mean, I think we're getting there. But I do think that once the user experience improves and people just don't have that friction of like downloading a wallet, I think we'll probably end up seeing that significantly ramp up as like that all that jargon gets abstracted away.
Yeah, just looked it up. It was Black Label graded by Beckett, Luffy, so one piece promo card being sold for 80K on Colony. Oxy, I see you with your hand up. Welcome to the stage, my friend. What are your thoughts on our RWA discussion?
Yeah, thank you. It's really interesting conversation, and I agree with you. I think this is the stickiest it's felt, right? since at least I've joined the space. And I guess my question is, we're all very crypto like native. We're all relatively knowledgeable about blockchain and all of that. So I guess how do you guys think we capitalize best on this new resurgence of all these like big institutions joining the space and getting exposure to it? Obviously, buying the underlying assets, whether it's Ethereum or Bitcoin, is an obvious kind of answer. But do you guys see different, maybe more unique ways for people who are a little bit more knowledgeable about the space that could, get exposure? And like, what do you guys think the best way to do that is?
Honestly, I think that, just buying the majors and waiting for a couple of years isn't going to make you significant returns. You might get a 2-3x, but I honestly think just the network is probably the most valuable thing. And actually, if you intend to be in the space long term, I think working with brands, businesses and getting them to use that knowledge is probably the best way of getting exposure. And I think you'll end up getting token deals. And if you're incredibly bullish on a specific project and you get a token deal and they do very well, then I think that's probably the best way to do well in the space with the knowledge that you have. I don't know if you have a similar or differing view, Legendary.
Yeah, I know what Funky would say. Funky would say just to buy coin. But Oxy, coming from the perspective of being knowledgeable and wanting to do something more active, I do think that Sammy's answer is quite an interesting one, because those advisory deals that you can get with companies that will often have their own token launch at some point come with a percentage of said token, and that puts you in an interesting role, especially if you say that you would have a network to help them grow and onboard or achieve their mission. I think that would be probably a more unique way than just trying to buy whatever asset more passively and wait for that to gain in value, to position yourself more actively in a role that could potentially then also land you an advisory deal in that niche.
Does that answer your question?
I think it does.
Okay.
Then let's maybe use the last 3 minutes of the show.
Yeah, Oxy got rugged, so I don't think he heard it, but I guess he can listen to it on repeat.
Oh wait, he came off mute now. Oxy, can you hear us?
Yeah, all good. I got rugged, but I appreciate you guys answering. That's perfect.
Gotcha, wonderful. Then let's use the last 3 minutes of the show to move to the final headline. It was initially the title of the Spaces, but probably there's not so much, honestly, to say about that, at least not in my opinion. We have Donald Trump to speak at Bitcoin 2024 at the biggest Bitcoin conference in Nashville later in the month, which will happen from July 25th to July 27th. I think Tiro in the YouTube comments said, I'm not going to scroll through all of them, said that he thinks that Trump won't show up there. We'd be curious to see if someone would spin up a bet on Polymarket on that. But independent from that, I think it's the positive or the key takeaway for me here once more is that the presidential election this time around in the States is actually taking crypto as a serious topic. Now, I know this is an opportunistic move, and obviously it's about getting more voters, and it's not the passion for crypto that Donald Trump has not had for the last 10 years. It's an opportunistic move, but nonetheless, I think that's kind of goes to say, or to speak to the point that you made, Sammy, on the show earlier on, that crypto as a whole, like sector and segment, has become more mature. If politicians at this top level are taking it seriously to make it a topic for the election.
Yeah, I completely agree. I think that it would be silly for them not to take it seriously, particularly after you've already got like Bitcoin ETFs that have gone live and they've been live for 6 months. So, and I think it is a really good attention tool as well, particularly with the meme coins. It just grabs attention. So you can see them using it as a political tool, but equally, I do think that it's going to become more embedded in what they do, because I think you'll have a lot of brain drain if they don't take it seriously and the regulators aren't kind of up to speed to give that clarity. I think people will go offshore to other locations.
Yeah, I think that's a very fair point. And I think that's something we will potentially again see happening in the EU if MiCA turns out to be as overregulated as some people think that it looks like. But with that being said, we are at the end of our show. So thank you very much, Sammy, for co-hosting with me. Thank you, Bear. Thank you, Oxy and Tiro, for joining us on stage. Thank you to everyone who's been, again, super, super active in the YouTube comments. Just Stefano, Tiro, Oxy, all of you are killing it there. And we will be back tomorrow for the final show of the week, 7 a.m. Eastern Time. In the meantime, have a wonderful rest of your Thursday and see you tomorrow.